Hi, everyone. Welcome to our Become a Lesser's Risk. Oh my gosh, sorry. Let me start over here. Hi, everyone. Welcome to our Become a Lesser's Risk Expert webinar. My name is Michelle Belden. I am your commercial underwriter here at CID Insurance, and I will be the one presenting the webinar today. Also on the call is Jacob Cole, our marketing coordinator. He'll be here to make sure everything goes smoothly, and if there's any questions that are popped in the chat, he will let me know so I can get those answered throughout the webinar. So I just want to go over a couple of housekeeping things before we get started. Just for if you haven't attended one of our webinars before, all participants will be in listen-only mode. So if you have any questions, feel free to type those in the chat box and we'll make sure to answer those. Your questions are important to us, so please ask them as we're going through the webinar. And then at the end of the webinar, we will have a short survey. So we would ask that if you guys can take that, that'd be great. It's really good feedback for us. It helps us, make these webinars better and improve anything else that we can. All right. So what are we going to learn today? Today, we're going to talk about lesser's risk, LROs, as I'll probably refer to it a lot through the webinar. So I just want to go over the different types of commercial buildings that you'll see, understand the underwriting guidelines that I am looking for, that my carriers are also looking for, helping you determine what coverages you should be offering for your clients, how to get a quotable submission from me, and just some changes I've been seeing recently through the with my markets and in the industry. So a lesser's risk, by definition, provides coverage for a building owner. So that's the person who actually owns the building, and they have a tenant in the building who's the one occupying the building. So I get a lot of people who get confused on this. Say a person owns a building in their individual name. We'll use my name, for example. So I own a building named in my name, Michelle Belden. But I have my own business that works there. That's ABC LLC. Those are two separate entities. Even though the same person owns the building and the LLC, they're still considered two separate entities. So we have to differentiate who's the building owner from who is the tenant. So if the tenant also owns the building, then it's all just whoever that business is. But if it's the individual owns the building and their business is the tenant, you have an LRO situation where you wouldn't be putting the property coverage on the tenant's policy because they're not the building owner. So that's a thing I get a lot on my submissions, things like that. People get kind of confused. They're like, but they're owned by the same person, which is totally fine. But you as a person can own 7 different corporations. Not each one is the same entity. So that's where you have to be able to differentiate. You have to draw the line. Who is the building owner versus who is the tenant? So again, the LRO is providing building coverage, GL coverage for the landlord, not for their tenants. All right, and then some different types of LROs, buildings that I wanted to point out. So you have your professional buildings. You'll generally see those as like medical offices, professional offices that have like lawyers or consultants, things like that in those types of buildings. Your commercial buildings could be light manufacturing warehouses, businesses that have garages in it, things that are a little more not so retail type things, like a retail strip mall as I have here, where you would see like your mercantile businesses and restaurants and things like that. And then a mixed use building, I have different definitions of this I hear from some of my agents. So I'll give you guys my definition of a mixed use building. Mixed use building to me means there is both a commercial and a residential occupancy in the building. So generally speaking, you might see a commercial tenant like a restaurant or a couple offices on the bottom. And then on top, maybe there's 2 or 3 floors above, and those are all apartment units. So to me, that is what I consider to be a mixed use building, meaning there's both commercial and residential in the building. And then our next couple slides are just going to be some pictures of these buildings, just to give you guys an idea. Nothing that this says this is what it has to look like, but just to give you some thoughts about when you're looking at it to kind of get a consideration for that. I do also want to say about I'm going to go back to the last slide real quick. Under the commercial building one, if your insured is part of a commercial condo association where they're only responsible for insuring the inside of their unit because the condo association insures the structure itself, we can provide coverage for those types of LRO risks. We will provide the interior coverage. Some carriers call it building coverage. Some carriers call it tenants improvements and betterments. Others call it BPP. However the carrier classifies it, if you have a risk like that, that is something we do have the ability to write. And again, just, showing you kind of a breakdown of the buildings here. All right, so now we're going to get into the underwriting. What I'm looking for when I get a submission from you guys. So first thing off, I'm needing to know what tenants are in the building. Is it occupied by one tenant, multiple tenants, who's occupying it? Because that will dictate what markets I can go to. Those really vary. So again, if it's office tenants, retail, light manufacturing, restaurants, etc. And then do their tenants carry their own insurance? As a requirement with all of my markets, and I'm probably sure it's probably true across the board for most carriers, that they are looking for their tenants to have their own insurance in place, and then the tenant needs to name their building owner, the landlord, as AI on their policy. If this isn't in place, then it's not something I would be able to provide coverage for. So they need to have a lease agreement where in their lease agreement it requires them to carry their tenants carry coverage and to name them as AI. That's really important, especially when it comes to losses. That can be helpful as well. And then also, are there any vacancies in the building? What percent is occupied? These days, I would say most of my markets are looking for 70% or more occupied to be considered a LRO. Some might go up a little bit higher than that, but generally once you get over that 50% mark, we'd consider this a vacant building instead of a partially occupied building. So in that case, if it was a vacant building, that submission would actually get transferred over to my coworker, Teresa. She handles all of our vacants. But again, it varies by carrier, so knowing if there are any vacancies is really important. I'm sure as a lot of you have seen, COVID has caused many vacancies in buildings, so that has become a factor in where determining if it's going to be an LRO for the building or if it needs to go as vacant. Some other things to take into consideration about the building itself. How old is the building? Has there been updates? My markets are looking to be able to offer special form replacement costs. We are looking for updates within the last 25 to 35 years, varies by carrier. And the updates we're looking for are to the wiring, the plumbing, the heating, and the roof. Those are really important things. My markets don't require, I know some carriers do require like permits and things like that. My markets don't. We're generally just looking for the update years, and we're going on the honesty system here, so we're just hoping that that's truly true. Things like that will be caught in an inspection, which we'll talk about in a little bit. Some other things to consider: the condition of the building. Are there parts of it falling off? Is there graffiti on it? Things like that. We're looking at that. That's something else that the carrier is looking at. Is there pride taken into maintaining your building? How tall is the building, the size of the building? So square footage, number of stories definitely plays a factor, because once you get over a certain number of stories, is it sprinklered, not sprinklered? That is definitely something to be considered as well, because that goes into the underwriting, because if it's a sprinklered building, you may be eligible for a credit. So that's something to also be on the lookout for when you are working a submission and sending that over to us. So I talked about inspections. Pretty much all of our markets for LROs do require an inspection on them, just because, generally speaking, they have a higher building limit associated with them, depending on the size of the building. But I would say most of our carriers, this is a class that is predominantly inspected on. So what the inspection is looking for, they're basically trying to confirm all the underwriting information you provided me that I put into the carrier system to get a quote is accurate. And as long as that's been received and everything looks good, we're hoping it all checks out. And some other things to be looking for that would be for an LRO specifically, they're confirming the building square footage, because that's what the general liability is rated on, is your building square footage. Confirming the tenants that occupy the building. We want to confirm that we are, have the appropriate tenants, because carriers do have guidelines on there about what tenants they'll accept. And some other things to think about that they'll be confirming is the construction type, because that does factor into the rate, the age of the building, the updates, again, the type of electrical, the type of plumbing, because there are prohibited types of electrical panels. Those will be your Zensco, Pacific, or Federal Pacific, Stab-Lok. If there's any aluminum wiring, knob and tube wiring, those would all be prohibited with my markets. And then also the type of plumbing does dictate if there is galvanized plumbing. Any portion in the building that's galvanized plumbing, I would only be able to consider as basic ACV, as my markets are looking for plumbing to either be copper or PVC. Before I keep going on, I do see we have a question. So somebody asked about what the max fire protection class would be for us. And for us, I mean, I've seen things up to 9. Our markets I will be honest, will probably get a little bit more limited when we get over probably protection class 6. So if you have something in those higher areas, you're more than welcome to sit it in, and I can definitely see if there's something we can assist you with. And then I also see about California itself. I will talk about California specifically when we get to the industry changes, because there are obviously a lot of changes happening in California, specifically with underwriting guidelines. So I will address that in a little bit. But if you guys have any other questions, feel free to keep chatting those in. All right. So back to where. All right. Oh, another important thing to talk about would be the types of stairways and railings. So are there handrails? I get this a lot on loss control. You might have like 2 or 3 steps, like a little riser almost. There's no handrail. Carriers, once you get over 3 steps, are looking for there to be a handrail. So I've seen it where, you just put one along the wall, and that's fine. No problem. You've met the requirement. That's super easy. The railing pickets are important because is it horizontal or vertical? If it's horizontal, think of it as like a little ladder. Somebody could climb up on it. So, taking, for example, a toddler could climb up that, get on top of the railing, and then, potentially fall over. So if there are horizontal railings, generally speaking, that's not something we're looking to offer coverage on, so prohibit with my markets. However, an easy fix, you throw some mesh in front of that so you can't use it as a step ladder, no problem. The carrier will accept that no problem as a response to the loss control if that was an item on there. Also, the same thing goes with the width. Even if they have vertical and they're more than 4 to 6 inches apart, throw that mesh on there and you've completed your loss control requirement for that issue, if that was an issue on the loss control. Again, the condition of the building is really important. They're looking to see if there's any cracks or potholes or things like that in the sidewalks or the parking lots. Anything that potentially could cause a trip and fall hazard, the inspector is wanting to point out to help the insured, your building owner, mitigate and reduce the potential for there to be a loss against them. General liability losses are definitely becoming more predominantly. I've been seeing a lot of slip and fall type losses lately. Somebody tripped over a cracked concrete and, the reserve set at 50,000 plus, and it's been a few years because they're still going to court over the matter. So these types of things are things to, point out to your insured if you go out and visit to the property, just to help them help themselves, to potentially limit any claims they may have. Then also we'd be looking for the appropriate life safety equipment. Are there fire extinguishers available? Are they currently tagged and properly mounted? That is a big one. We see that a lot on loss control. I would have to say that's probably one of the number one things that I get back on a loss control inspection is that's on there. So it's real simple. We have a person come out, a company comes out to our office every year. Honestly, they're here for like 5 minutes, don't even know they're here. They come, they check them, tag them, and then we're on to the next year. So it's a really easy thing, to find a company to get in contract with. It's not something that has to go through the fire department. There are plenty of companies out there that will do them. I've had people ask about that before. Smoke detectors, we are looking for those to be installed appropriately in each unit or building, depending on how many there needs to be. These do not have to be hardwired. You can order them on Amazon, go to Home Depot, pick them up, install them yourself. They just need to have a smoke detector in their building. So these are, just some things that we see. I just wanted to highlight some of the things that I come across a lot on our when we see inspections. All right, so let's talk about how to determine your building valuation. How are you going to determine that limit of insurance that they need? So your limit of insurance for each building is going to vary. Here in San Diego, you got some buildings that we could that are on the beach that are worth $1 million, but if we pick them up and move them inland, they could be worth half that. So again, the location is going to take into consideration how the limit is determined. Your construction type, is it frame? Is it joisted masonry? Is it masonry? It depends. That will also play into the factor because of the replacement cost for it. The height of the building, the total square footage, the age. These are all important things to think about because we are trying to find the appropriate limit to be within what a replacement cost estimator would come to. So I always get a lot of questions about how to determine the building limit. My number one thing is, if you have available, run a building valuation report, replacement cost estimator, whatever you want to call it. If you have a Marshall and Swift, if you have access to CoreLogic for the risk meter, whatever works for you. I know some carriers, some of my agents have, through their carrier, they can run one through one of their direct markets. So if you have a way to run one because you're not sure how to calculate the limit, I definitely recommend that, because that will give you a pretty true value. If you're not sure, it's a new client to you and they have current coverage, you can always take a look at what their current coverage is, base it off of that, or look at that and go, that seems kind of low or seems kind of high, and make a recommendation to them based on that. Also, what I do when I get a submission in, I double check to see what the cost per square footage comes out to. So I just do the math backwards. I take the limit, divide it by the square footage to see what the cost per square foot comes out to. Generally speaking, I see anywhere from $100 to $250. Once we get over $300 a square foot, if somebody's looking for that, I will generally ask you for a building cost estimator, because my markets are going to ask me for one because they might feel that it's too high. I know, each area is different. Like I said before, it's going to vary by the location. So if you have something that can back up the requested limit you're looking for, we will definitely, we can work off of that with that. But if we don't have that documentation, then we're going to go off of what the carrier system may determine. Some of my carrier systems have ones that determine it, and some of them do not. So again, it would be a case-by-case situation. But the number one thing I want to say is, do not base the building limit on the market value. That's just not going to work for the carrier. That's not going to be what the replacement cost of the building is. Oh, I see. We have another question. Somebody asked about, for smaller businesses, if they can get their own fire extinguishers. Yes, you are welcome to go get your own fire extinguisher. If it's a brand new fire extinguisher, that's no problem for us. That's an acceptable thing. Just from that point forward, we would just be looking for them at that point to be annually serviced. But even if you just go out and buy your own, that's totally perfect. Not an issue for us. All right. So I want to talk about a statement of values, or an SOV, as I refer to it a lot of the times. So for me, a statement of values, it helps me if there's multiple buildings. For a risk, it helps me break down the buildings by the number of units, the square footage, and the property limits. So this is, like I said, really helpful for me on multi-building locations. This is something I do need to help me. Not all my carriers will offer blanket limits. And even if my carriers do offer blanket limits, they are looking for some sort of breakdown for their records. So that's where a statement of values can definitely come in and be helpful. So again, like I said, they are used for multi-building complexes or multi-locations. People, for these ones, if you have additional property components, such as there's fences or detached garage, maybe there's like a marquee sign, some BPP of the building owner, those are other places, if you don't put those on the accords, that my agents put them on. So I have that information so I can make sure I'm providing you a quote with all the coverages you're looking for. It is also helpful to let me know what's attached versus detached property components. So if there's a fence around the property, but it's not attached to the building in any way, then we'd have to schedule the fence out separately from the building. But if it's adhered to the building, whatever limit you wanted to include for the fence, we'd want to make sure that's included in the building limit. Somebody had a question about the max limit of stories of a building. I will say we're not really a market for high rises. I can probably, on the high rises, probably offer you GL more on that side of things than property. I'd probably say no more, like where I would say we'd probably do best, that would probably no more than 5 to 7 stories. But again, if you have something taller than that, feel free to send it over, and I can definitely see if something we can consider for you. All right. And then I just wanted to provide you guys with an example SOV that, I use in the office. It doesn't have to look like this, just to give you kind of an idea what we're looking for and how to break things down. Again, just an example, just some things to think about if you're putting one together and you're not sure how to. All right, so let's talk about coverages. So the important coverages for a lesser's risk, generally speaking, most people are looking for property coverage for the building and any other property components that they may be responsible for. Business income is really important, obviously, so your loss of rents. I do want to say that I generally cannot offer ALS, but if you are, so I will always need an annual value for the rents, even if I can offer ALS. Again, the carrier is still looking for that value. Same thing with the SOV, how I was talking about if I can offer blanket coverage. They're looking for that information. Other coverages to consider on the property side of things is building ordinance coverage. Most of my carriers are able to offer that. So if you're looking to have A, B, and C, or any combination of those included, that is available. Equipment breakdown is available. Most of my carriers have some sort of property enhancement endorsement that can be added on. And then general liability is obviously pretty important for people. Like I was mentioning earlier about the slip and fall type losses I've been seeing lately. Some people I see, they don't want to insure the GL on the building. They just want to do the property because they're not concerned about it. I do recommend to you to recommend to your clients that, they go for the whole package on that to protect them from GL side of things as well as property side of things. We can also offer hired and non-owned auto if that's something that you're looking for. And there are some other coverages, if there's other things you're looking for, we can definitely look at adding those on. But I would say these are predominantly the coverages I see most often. And then I just want to talk about some of our standard cover features with our markets. Most of my carriers do offer 1-2 limits. I do have some that will offer 2-4, but for the most part, 1-2. So if you need those higher limits, we can definitely look up at excess or umbrella limits. For LROs, we can go up to 10 million for that limit, depending on what market I can go to. So that is available if we need those higher limits. Most of my carriers do not have a general liability deductible for LROs, which is nice for people. Property limits, I would say up to 50 million. But again, that depends on the occupancy, the building type, and where it's located. So if you have something higher than that, feel free to submit it over. I'm definitely happy to take a look at it, see if it's something we can offer. Special form replacement cost is available with most of my markets. It just depends on the age of the building and if and when those updates have taken place if it's an older building. I do have markets for those older buildings. I think the earliest one I've ever quoted is like 1880. So, I do have some options out there for that. If there is a mortgagee or a lost payee on the policy, on the building, we can include those on the policy at no additional cost. If they have a property manager, we can generally add those on there as well. All right. So how to get a submission for me, to get a quote for me. So what I'm looking for in an LRO submission are an Accord 125, 126, and 140 even if it's in your email. I just need to know the building square footage, the tenants, and the annual rent. So those are things that tend to be missed a lot. So I need that information to be able to determine where I can take your business to market. Supplementals on LROs are pretty helpful, especially if there are like restaurant type tenants in the building, because there are certain requirements for a restaurant that we would be looking for. So if you have one completed from somebody else, I can definitely work off of that. If not, we have one on our website, or I can always send you one if you don't have one. So that's an option there. I'm also looking for either a rent roll or a tenant list. So in this instance, a rent roll would be a list of the tenants, and generally it's broken down by the tenants, the square footage they occupy, and then generally it has other information on there that pertains to the building owner. I'm really looking for the square footage they occupy and the type of tenant that's in the building. Again, a statement of values is if that's applicable. So if it's multiple building, multiple location. So I have that breakdown. 3 to 5 years loss history. We definitely something that I need. So if you have that, that's great. If you don't and you know the risk is clean, I can quote subject to favorable loss history. If there have been losses, I will say I've been getting a lot of risk lately with a lot of losses on them. So if they do have losses, the information I'm also looking for is that what happened. So a description of the loss, what caused it, whatever the case may be. If there was any damages, confirmation that all the damages have been repaired, and if and then after that, we're also looking for what steps did the insured take to try to prevent future losses of this happening again. So I'll take a slip and fall loss for an example. So say there was cracked concrete. Did they repair the concrete? Did they maybe put a strip down? Did they put something out there to help inform whomever is going onto their premise to like try to mitigate and limit these types of losses from happening again. And if you have a target premium, that's always helpful as well. Will help me determine where I can take. Looks like we have another question. Do you have a market that would take a lesser's risk with a tenant in a wood pallet manufacturer? I do have some markets that will consider wood pallet manufacturers. It would be E&S. That is something we can take a look at. I will say it's not something I get a lot of or have a lot of market availability for, but I do have some markets that will consider. I also have a question about historical buildings. I can consider historical buildings with a few of my markets. It's not generally the easiest thing for me to write. So if you have somebody that maybe specializes in historical buildings, I might recommend you take that there. But like I said, it's something we can take a look at. So if you have one, feel free to send it in. I'm happy to take a look and see if it's something we can consider. All right. So I promised we would talk about some changes I've been seeing. So the type of tenants that are occupancies are being accepted, I've definitely seen that. I'm taking a change with some carriers. Some carriers are backing away from certain types of tenants because they've seen the losses on them and they're just not wanting to go there anymore. So, I've definitely seen that change. Risk location, obviously, California is a big one. For most people, as you know, brush and wildfire mapping up and down California, and I'm sure we're going to start seeing it. Some other states have been hit hard with brush and wildfire as well as something else to start taking an effect. So I know it's really hard with some of these because I'm in agreement with you guys from my perspective sometimes because I see where these risks are and things like that, and I don't see it. They could be in the middle of the city, but their wildfire score comes back as, let's say, a 75. That's really high in the carrier's eyes, and then you've got distance to brush at like 1,000 feet, and they just don't want it. So I know it's becoming a challenge, but I'm trying to help everybody the best I can. Sometimes I'm only able to offer monoline GL on those risks. If you have another property market that's okay with the brush and wildfire areas, I definitely, recommend if you have those options to explore all the options. I've been seeing some changes. The carriers have been changing the age of the building they're accepting, regardless if there's been updates. So I've been seeing a few carriers make some changes there where they just aren't wanting to take on the older buildings any longer, even if they've basically been gutted and are completely brand new on the inside. They're just not wanting to take them. For mixed use buildings, again, my definition of mixed use, having commercial and residential buildings in there. I've been seeing some carriers have been going to adding a habitability exclusion onto the GL because of the residential units. I'm sure some of you have seen that on if you have an apartment submission and things like that, that you're starting to see that. I would say, generally speaking, this is only on a non-admitted side of things for any non-admitted markets I may be going to. I don't generally see it on your admitted or preferred side of things. You don't generally see the habitability exclusion, but I've definitely been seeing that being added on. A new one for me recently has been crime scores. Another thing carriers are starting to run, and if their crime score doesn't meet their requirements, it's becoming something that they're taking out. The risk might look great on paper, but then you get that crime score, and they're like, "Oh, I'm sorry, this doesn't meet our requirements." So I've been seeing some of that lately. So it's a little new to me, so I'm still trying to, get a handle on that, but I have seen some declines from my markets because of that. I see that we have a question about if we can do an LRO with an auto repair type service. That's definitely something I can consider. That's not a problem. And then also medical offices, yes, we can consider, as long as they're not an emergency room, an actual hospital. So, there's just like a dentist's office or your primary care doctor's office, something like that. Definitely something we can consider. Assisted living facilities, those are a little more difficult. For those ones, generally speaking, I generally only have a monoline property market for those. It's not something my carriers like to write GL on. But we're constantly looking for new markets and things like that, so things may change. So again, if you ever have tenants that you're not 100% sure about, feel free to give me a call or shoot an email over and definitely let you know if it's something we have a market for. All right. Oh, we have one more question, it looks like. Okay, so wind and hail for coastal areas. I'll be honest, we don't do the greatest with things in the wind and hail. We get a little bit more limited on our markets on that side of things just because we don't have the same market availability we have in, say, like Texas. as we do here in our home state of California. So depending on the carrier and depending on the risk, we may or may not be able to offer wind and hail. It just, again, it kind of varies. So if you have one in an area like that and you want to run it by us, feel free to reach out, and I can definitely let you know if it's something we'd be able to consider and be able to consider the wind and hail on as well. And then I have a question about cannabis stores. So cannabis stores. So if it's a retail dispensary, I have a few markets that will consider those. If it's a growing operation where they're actually doing the growing itself, I only have 1 or 2 markets that will consider growing operations, and there's a little bit more underwriting involved in those type of risks than your like retail dispensary. So if you have something cannabis related as far as a tenant, feel free to reach out and we can definitely see if we have an option for that one. All right. So if you guys have any other questions, feel free to type them into the chat. And if I don't get them answered on the call right now, don't worry. I'll make sure we get you a response via email. I'll give you a call myself. My contact information is listed on this page, and you guys can start submitting any of your submissions, submissions at cidinsurance.com. Again, like I had mentioned at the beginning, we do have a short survey, so if you guys don't mind taking that, we'd appreciate it. Looks like we have one more question that came through about liquor stores. I do have some markets that will consider liquor store tenants, so that is not an issue for me. So if you have those type of risks, feel free to submit those into us as well. So if you guys have any other questions, like I said, feel free to drop those in the chat, and if we don't get them answered before we close out, we will make sure we get you guys an answer on those. So we thank you again for joining us today, and have a great day. Bye.